This is going to be Datadog. Ticker is DDOG, and you can't go wrong starting your morning with a story that involves dog, even if it's a company. Datadog beats earnings, raised guidance, but DDOG stock still plunged 19% as Wall Street says it all comes down to one customer. So we'll see how the report is. You tell me if you think there's a bounce play here today. Despite reporting a massive 36% revenue surge and raising its full-year guidance for the second quarter of 2026, Datadog, ticker DDOG, saw its stock plummet 19% on Thursday as weak third-quarter guidance tied to a single major client sparked investor panic. Futurum Equities' Shea Ballure observed that the massive software sector sell-off, quote, comes down to one customer, end quote. Datadog delivered a robust second quarter with $1.12 billion in revenue and adjusted earnings of 65 cents per share, clearing Wall Street estimates. However, the company's third quarter guidance implied a deceleration to roughly 29% year-over-year revenue growth. Management attributed this slowdown to its largest customer, a leading AI company with nine-figure contract using 17 Datadog products, reducing its usage starting in the third quarter despite a recent renewal. While the CEO, Olivier Pommel, refused to explicitly name the client on the earnings call, the leading AI company is widely believed by Wall Street analysts to be OpenAI. Quote, the entire reaction comes down to one customer, end quote. That was Shea Ballure, highlighting the inherent risks of Datadog's consumption-based business model, where large enterprises treat cloud and AI workloads like a utility bill. Addressing the investor anxiety during the earnings call, Datadog CEO defended the core business, stating, quote, we don't control what's happening to a specific customer, end quote. Pommel noted that the company chose to fully de-risk its guidance to prevent this isolated usage reduction from overshadowing broader business momentum. Beyond the single customer headwind, Datadog's underlying fundamentals remain remarkably strong. Pommel emphasized that revenue growth for non-AI customers accelerated to the high 20% range. That's up from 18% a year ago. Furthermore, Datadog now serves over 750 AI customers, including all top 10 of the top 10 AI leaders. The company is also leaning heavily into automation, launching a suite of new capabilities for its Bits AI at its recent Dash conference. Pommel underscored the strategic shift on the call, declaring, quote, the future is observability. The future of observability is not just observing, it's fixing, end quote. While the steep pullback reflects the market's high expectations and expensive valuation multiple, Ballure concluded that if the rest of the business continues accelerating, quote, the sell will look excessive in hindsight, end quote. So let me know, is Datadog a bounce candidate here? Looks like it printed, let me go back to the chart here real quick. We'll take a look at it together. DDOG, here's what it looks like. You can see we're kind of in no man's land, although I would expect some support down at 217 if it continued to pull further. But if we look inside here, this is what it looks like. So we had the move down yesterday in the pre-market, and then it kind of stayed steady here, and it's kind of consolidated, and it looks like it's okay here today. So part of me wonders if it holds this 221 area, if we can maybe break yesterday's intraday highs. I'm not as concerned about the pre-market highs as I am about the intraday highs. That value is up here at 243, let's call it. Move above that, we might be into the gap here on Datadog.